See, time is around 8:34. Let's look into Saturday's and Sunday's Bitcoin trade analysis. I posted you trade analysis on Thursday and Friday yesterday, and I told you that in case if the market guys rejects price from these levels, you can see and closes above this range, there is a high chance that the market might continue bullish. But what happened is that the market clearly broke towards the downside, even after this kind of huge impulsive momentum. And what I have plotted it before is that I have plotted the low of this candle to the high of this candle, and there was a very good chance that the market might take support from 350 levels and continue further bullish. But you can see market showed some kind of bullish momentum here during the day, and you can see at around 3 to 5 guys, you can see a huge bearish momentum towards the downside. You can see there was a good rejection of price from yesterday's low levels here. This is yesterday's low way, and this is on Sunday, and you can see the price here forming a good kind strong support zone over here and continuing bullish. Swept this buy side liquidity, entered this fair value gap over here, rejected price from these levels and continued very bearish momentum towards the downside. And if you try to plot the Fib extinction levels here, the common point between this to the common point between this to the common point between this, you can see the market coming all the way to, you can see market came all the way to 2.6 level over here and even 3.6 level as well. So I'll be explaining to you the trade analysis on Sunday as well as Saturday. So let's look on a daily time frame analysis, guys. What happened on Friday is that the market rejected price from higher levels and closed within this range. So what you could have targeted on Saturday is this low over here. So there is a high chance the market would continue all the way to this low. So let's look into a 15 minutes time frame and see where exactly the closing. You can see this was on Friday, guys. The market made a higher high here, came, grabbed this liquidity, the buy side liquidity over here, or you can consider this to be a high resistance liquidity sweep. Rejected price from here and made a failure swings over here. You can see there are multiple failure swings over here. There is a high chance the market might, when the market reverses, guys, there is a very good chance the market might break these levels over here, since these are all failure swings. And if you consider this sweep in a higher time frame, guys, you can see, or in a 1 hour time frame, you can see this sweep in liquidity. The market showed a very good bullish candle over here, swept this liquidity and immediately came back to range. So on a higher time frame, it looks like a liquidity sweep, and you can see the market over here. This was on Saturday, guys. You can see here the market on Saturday. You could have targeted this low on Saturday, guys. You can see over here the market rejecting price from these levels, continuing bearish over here. And looking at the nearest price action, this was a very strong demand zone over here. But the market came, took support over here, failed to make an higher high. Instead, the market broke structure towards the downside. You can see this was the structure which market broke over here. You can see a clear break of structure here, where the market clearly broke, guys, towards the downside. And if you consider the last up move before it broke structure towards the downside, is this momentum over here. So if you try to plot the common point between this to the common point between this, you can see the market mitigating this fair value gaps over here, rejecting price from here and continuing further bearish. First market structure shift is this momentum over here, guys. You can see this was the first market structure shift, or you can consider it to be the first chop formation. And if you try to plot the swing high of this candle to all the way to this swing low here, you can see price rejecting from 0.38 level over here. This is the 0.38 level where price is rejecting and clearly broke structure towards the downside. And the market came to 450 levels, rejected price here and continued again bearish and even broke this level. So there is a good chance the market would come all the way to this low over here, guys. This was our target levels where there is a high chance the market would continue bearish. So either you could have taken short position here, guys. So you can see the common point between this to the common point between this to the common point between this. So you could have targeted the 100% move over here or the 1.68 level. You can see the 100% move over here, or either exactly the market came all the way to 1.68 level over here, or in case if you might have taken your position here, or you could have just plotted your anchor gap level here, guys, the swing high, and you can see rejection of price here, rejection of price at here, clearly signifying bearish, rejection of price here, rejection of price here, and you can see how the market continued bearish, and there was a lot of hesitation in market to break these levels, and immediately the market coming back to range. So And in case if you consider this momentum which broke structure, and if you try to plot retracement levels of this structure over here, the common point between this to the common point between this to the common point between these guys. So either you could have targeted the 1.68 level, or you can see the 2.6 level, or all the way towards the swing low here, guys. So either ways you could have targeted based upon risk to reward ratio, and you can see this kind of rejection. Either you could have taken short position here, guys, keeping your stop loss just above that 21 moving average or the swing high over here, where the market, guys, of the swing momentum towards the upside. If we consider the low of this candle to the high of this candle, and you can see the support over here was being broken towards the downside. Either you could have taken this breaker block levels over here, or once if this 0.5 levels has been broken towards the downside, that's where you could have taken this. You can see if you consider the swing low to swing high, and this is a 0.5 levels of that swing momentum. So either here or towards the downside is where you could have taken position and continued further towards the downside, and you could have targeted it all the way to this momentum over here. And this was on Saturday, guys. So this is on Friday. This is Friday's position where you could have taken trade. And coming to Saturday over here, you can see clearly the market sentiment is bearish, and again the market broke structure, again retraced to 50 levels and continued, again make a lower high, and again broke structure towards the downside. You can see a clear pattern over here where the market lower high, higher low, lower low, higher low, lower low, higher low, lower low, higher low, lower low, higher low, and lower low here. Till all the way here the market made a lower low, and here is where the market showed a little bit of sentiment to bullish side, where the market clearly formed a chalk over here. So either you could have considered the market sweeping or taking support from this demand zone over here. You can see this kind of huge bullish candle over here. So if you look into a 5-minute time frame over here, you can see a huge bullish candle. And if you try to plot the demand zone over here, so if you consider this demand zone over here, the low of this candle to high of this candle, and if you try to plot over here, so you can see the market came all the way to this demand zone over here. Here the market failed to make a lower low. Instead the market formed a chalk over here. So again the market came, mitigated all the way to this fair value gap. You can see the market rejected price from these levels, mitigated this fair value gap, or you can consider this to be a 5-minute order block, and suddenly reversed. And you can see you could have traded this position towards the upside in case if you might have taken long position. Or either what you could have done, guys, is that in case if the market sentiment would have been bullish after this chalk formation in a 15-minute time frame, let me explain to you. Or let's look into a 5-minute time frame, guys. So after this chalk formation over here, when the market came all the way to this 5-minute order block level, either the market would have rejected price from this fair value gap, guys, or you can see this is the fair value gap, or you could have plotted the optimum trade entry zone if you consider the common point between this to all the way to this common point. Either you could have plotted the optimum trade entry zone over here. This was optimum trade entry. Either you could have expected the price to reject here, you can see, but the market came all the way to this fair value gap and even broke the 5-minute order block towards the downside and immediately reversed price. You can see this failure where the market swept this order block and immediately came back to range, clearly signifying some sort of demand over here. Either you could have taken long position over here, or you could have clearly waited for a market structure shift over here. You can see the market here clearly broke structure towards the downside, or if you look into a smaller time frames, definitely the market might have broke structure. You can see guys, the market actually broke structure and the market retraced here. So either you could have plotted your anchor gap level here. You can see price taking support over here, or even this low over here, where the market of this candle clearly broke structure towards the upside. Or you could have plotted the fib levels over here. If you consider the high to low of this candle, the market retracing back all the way to this 550 levels over here. This is the 550 level where market retraced. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, so you could have targeted the 100% move, or the next buy side liquidity over here. You can see this is the next buy side liquidity where the market came and swept over here. There was a high probability that the market would have broken these levels and continue further bullish rise, but you could have just tried your stop losses to here. In case if the market continued bullish, the market would have broken these levels, these high levels also. But you can see the market sentiment was bearish and the market failed to make an higher high here, not breaking these levels, guys. You can see there are a lot of failure swings over here. So you could have easily expected the market to break this buy side liquidity, but the market failed to make a higher high. Instead, you can see sudden reversal in market momentum and changing the market sentiment here from bullish to bearish. So you could have taken long position and you could have tried your stop losses here, or you could have trial it into a small profit over here, guys. So whenever you find such kind of reversals, that's where you could have exited your position, or you could have just see. And the market here, guys, swept this liquidity over here and even broke structure towards the downside, clearly changing the market sentiment here from bullish to bearish. And if you try to plot the high to low of this candle, you can see the market reaching back all the way to this optimum trade entry zone over here. This is the optimum trade entry zone, guys, where the market retraced all the way to these levels. You can see aggressive momentum towards the downside, and you can see this kind of aggressive momentum where either the market even broke a huge. You can see this kind of aggressive momentum where the market formed a breakout structure. You can consider the chalk formation over here, where the market swept this liquidity over here, and even broke this order block level and came all the way to this demand zone over here, rejected price from these levels and continued further bullish. So a lot of buyers might have entered here, expecting the market to go further bullish. But what happened is that you can see immediately the market even retraced here. And when you find this kind of retracement where the market failed to break the order block levels over here, you can see this was an order block level where the market failed to break order block level. You could have plotted the common point between here to the common point area. And again, you can see the market retracing all the way to this optimum trade entry zone over here. As well as if you consider this fair value gap over here, you can see there is a fair value gap is where the market has not yet mitigated. And you can see this fair value gap where the market came, mitigated this fair value gap and rejected price from here and clearly broke structure towards the downside. You can see a clear breakout structure over here. And again, the market, you can see, came all the way to this levels, rejected price from this 200 moving average and broke structure towards the downside. You can see again breakout structure. And if you consider this momentum towards the downside, and if you plot the compound between this to the compound between this, again the market retracing all the way to this optimum trade entry zone over here, rejecting price from here as well as the 200 moving average resistance over here in a 5-minute time frame, the optimum trade entry zone where the price rejecting here and clearly broke structure towards the downside. And if you try to plot this common point between this to the common point between this, so the market retracing all the way to 0.38 level over here. This is the 0.38 level where the market retraced all the way to this 0.38 level. So either you could have taken your position here, or your position here, guys. So better is that this is the momentum where it changed the whole sentiment from being bullish to bearish, guys. After the chalk formation, the market swept this liquidity and immediately came back to range, clearly signifying some sort of bullishness. But you can see the market came all the way to this buy side liquidity, failed to sweep above these levels and immediately showed some kind of selling pressure. So this was the momentum where there was a high confluence. And you can see if you try to plot the anchor gap level over here, and you can see the market here with this momentum, guys, aggressively broke structure towards the downside and again retraced back over here. And you should always wait for retracement, guys, rather than showing some kind of impulsive momentum. I will explain to you guys what I mean. Is that, see, with this momentum towards the downside, you could have expected the market to retrace over here and continue further bearishness. But what I am telling you is that if you consider this order block level and you could have waited for retracement, this momentum towards the upside wouldn't have occurred. But here you can see, if you try to plot these levels over here, the low of this candle to the compound within this, you can see the market here breaking the 0.5 levels over here. This is the 0.5 levels where the market is breaking towards the downside. But if you consider this momentum over here, and you can see the market breaking the anchor gap level over here as well as the 0.5 levels towards the upside. But here you can see the market here broke the anchor gap level. But with this momentum, guys, the market here failed to break above the anchor gap level. Instead, after this retracement with this candle, guys, where you could have taken short position, keeping your stop loss just above this candle itself, and you could have targeted it all the way towards the downside. So if you try to plot the Fib extinction levels here, the compound between this to the compound between this, so either you could have taken your profits at the 1.68 level, or you can see the 2.6 level over here. You can see, guys, what I'm saying exactly at this momentum is where you could have taken the 2.6 level over here. So you could have targeted it all the way towards with just a one candle of stop loss, guys. That's why anchor gap levels are very helpful for one to make a decision. And here you can see, if you try to plot your anchor gap levels here, the market breaking towards the upside. But what we need to see here is that this is the anchor gap level. And again, the market, guys, came all the way to this levels over here. This was yesterday's low. The market came, rejected price from these levels, and you can see this kind of momentum towards the downside. This is where I have taken some long position here. You can see the market swept this liquidity over here. This is the sell side liquidity. Sell side liquidity. You can see sell side liquidity, and immediately market reversed and formed a chalk over here. You can see the chalk formation. So what you could have expected is that the market coming all the way to this demand level over here. You can see the market came to this demand fair value gap over here, and there is another fair value gap over here. So either you could have expected the market, if you consider this swing low, to all the way to this swing high, and you could have either expected the market to reach this optimum trade entry zone. But what happened is that the market came all the way to this order block levels, mitigated this order block level. You can see this is a clear 5-minute order block where the market came mitigated. And after mitigating, guys, even this fair value gap also has been mitigated. The market clearly formed a break of structure towards the upside. This was not an impulsive break of. You can see even if this you consider this, it's not an impulsive break of structure. But if you try to plot the anchor gap level, what you could have considered is that if you consider the common point between here to the common point between, if you consider this swing high to all the way to this swing low here, you can see the market taking support from 550 levels over here. This is the 550 level, guys, where price is taking support. And in case if you try to plot the fib extinction levels, the low of this candle to the high of this candle to all the way to this low. So you could have targeted the 100% move. Or you see, you can see clearly 1.68 level exactly at here, the way the market came, rejected price from these levels and continued bearish. So long position here, guys. Long position somewhere here, keeping your stop loss, or once if this anchor gap level has been broken towards the upside, is where you could have taken long position, or you could have placed your anchor gap level. Then you could have taken long position here, or this anchor gap level over here. And you can see the market broke here, retested here, and even broke towards the upside. Or you could have plotted the fib retracement levels, guys, the high to low of this candle over here. And once if this 0.5 levels has been broken towards the upside, you can see the 0.5 levels being broken towards the upside is where you could have taken long position, keeping your stop loss just below that level over here. So this is where you could have taken, and below this candle itself, you could have kept your stop loss and targeted it all the way towards the upside over here, sweeping this buy side liquidity. Next buy side liquidity you could have targeted, guys, and you could have tried your stop losses here, seeing this kind of bullish momentum. And you can see after this the market immediately shows some kind of rejection, and you can see this kind of huge bearish momentum. So you can see there was some kind of fair value gap over here. See this fair value gap over here where the market mitigated this fair value gap. And if you try to plot the common point between this to all the way this levels, guys, the market here is lying at the optimum trade entry zone over here. This fair value gap as well as this optimum trade entry zone are in confluence with each other, guys. The optimum trade entry zone as well as the order block fair value gap over here. You can see this fair value gap as well as this optimum trade entry zone, guys, both lying close to each other over here. And either you could have taken short position, or immediately when this level has been broken towards the downside, you can see this neckline break, guys, over here, or the 0.5 levels of this neckline break, where you could have taken position and targeted it all the way towards the downside, clearly signifying bearishness. So with this momentum, or with this candle also, after this candle also, you could have taken short position here, keeping your stop loss just above this candle, and you could have targeted all the way towards the downside, guys. And for target levels, what you could have targeted is this swing low. You can see clearly the market broke this swing low, and next swing is if you look into a 1 hour time frame. So after this break, guys, you could have targeted all the way to this swing low. You can see here the buy side liquidity over here. Sorry, the sell side liquidity over here. So see how the market came all the way to this sell side liquidity, either this low or this low, this low, this low, and the market came exactly here and rejected. So you could have targeted it all the way to this levels, guys. So I hope you're understanding this momentum, showing sudden momentum towards the downside. Or you could have just tried your stop losses here, guys. That's how you could have traded your position. So this is about my Bitcoin trade analysis, guys. I hope you're understanding what I'm saying. We should always mark the fair value gaps in person before itself, and you can see some kind of reaction towards the either the upside or the downside. Whenever you can expect some kind of momentum changing, either in upside or that's the momentum you should take your positions, guys. And that's how which will help you to trade based upon risk to reward ratio. And you can see this was one good opportunity. This was another good opportunity. This was another good opportunity for you to take positions over here. And coming to Saturday trade analysis, definitely this momentum, guys. You could have just taken your position over here. And you can see here is where you could have exited, where the market failed to make a lower low here. Instead, the market formed a higher low and broke structure towards the upside. and formed a chart. Again, retraced back to this order block level. Took mitigated these levels. Either you could have taken long position over here, targeting this swing high here and trailing your stop loss all the way to this low. You could have taken multiple trades, guys. So you can see this is the rejection, keeping your stop loss just below this order block level and targeting all the way to this side. But you can see on this way, you could have just tried your stop losses here. And with this momentum, is suddenly the market changing the sentiment from being bullish to bearish. And you could have exited with a small stop losses, trial stop losses over here. And you can see this was optimum trade entry. Either you had taken position over here, or if you consider this swing momentum where the market came all the way to this optimum trade entry. But definitely this momentum though is a manipulation over here, guys. You can see how the market swept this previous low and immediately came back to a range, clearly signifying some sort of bullishness. But the market failed to make cross this high over here. So you could have waited for retracement, but here the retracement was very aggressive and clearly the market came all the way to this demand zone over here. And here the market failed to make a high. Instead, it broke structure towards the downside, came all the way to this optimum trade entry, again broke structure, again retraced to 0.5 level, 0.38 levels, and clearly broke structure towards the downside. I think this trade analysis is quite sufficient, guys. You don't have to capture each and every trade, guys. One trade for a single day is more than enough, guys. In Bank Nifty, you can become the top 1%, guys. I'm telling you, the top 1% traders if you follow a good risk to reward ratio. And either you could have captured either half of these momentums, guys, either half of these momentums or either half of these momentums, you can become a very profitable trader. And if you do this consistently over the period of years only, then you can be a successful trader, guys, and following a proper risk to reward ratio. See, here is where I have taken long position over here, guys. You can see this kind of chop here where the market came all the way to this swept this liquidity over here. Or if you consider a daily time frame analysis, what I have done is that if you mark the low to high of this candle, you can see this huge impulsive candle over here, guys. I plotted the 0.5 levels, or you can consider 50 levels over here. So you can see this line over here, guys. So let market in double frames, and you can see the market came all the way, swept this liquidity over here and immediately came back to range. So I consider this 0.5 levels where the market litigating, and there was fair value gaps over here, guys. You can see there was a fair value gap over here. So you can expect the market to come and mitigate these fair value gaps, and immediately the market came back to range. And again, the market retraced all the way to this order block levels. And what I have expected is the market to break this level high over here and continue further bullish. But you can see the market at this fair value gap rejected price and continued bearish, guys. So you should always be very vigilant about the fair value gaps. And in case if any reaction comes in this fair value gap, you should trade according to that momentum, guys. So either you could have taken long position and you could have tried your stop losses here, and expecting the market to break this level. But you can see clearly the market failed, and you could have either captured this momentum over here, guys. So either you could have captured, if you can enter your position, 200 to 300 points is where you could have captured, guys. So 200 points also you could have made a very decent profit, guys. Not that, but if you win, you win big, guys, and if you lose also small. And big losses is very important, guys. You should always be very vigilant about handling big losses. Better you have small losses and have big wins and small losses rather than big losses, guys. So trade management, risk management is very important in trading. And once if you are very good at practicing trades and taking trades based upon risk to reward ratio, only then you can become a profitable trader. So better you follow your trade analysis in that way with minimum risk to reward ratios and trade based on it, guys. So I hope you understand. In case if you find my videos helpful, guys, please like, share, and comment. Share with your friends and family. And in case if you want to message me, Instagram is a way to go, and I would be glad to respond to you, guys. And if you have any suggestions over here, please leave a comment below. I would be definitely reading your comments, guys, and I would be glad to respond to you, guys. Thank you.